clearly that media transition to streaming is already underway. But do you think this dispute could put the nail in the coffin, so to speak, when we think about the future of linear?
Yeah, certainly it's something that could accelerate the decline of pay TV. I think something that sticks out to me, in particular about this dispute between the two companies is, in one way or another, it's still affecting what consumers are able to access on video streaming services. So one of the reasons why this dispute between Charter and Disney is such a big deal is because ESPN is involved. And of course, we know that with the pay TV landscape declining, it still has a really big reach. And because of that, major sports leagues are generally still hesitant to put a large percentage of their regular season games on video streaming exclusively. So with that, consumers really need to be able to access traditional TV channels, whether that be on cable or a live TV service like Hulu with live TV, to be able to watch a large portion of live sports. And our data has shown how this is impacting consumer attitudes on video streaming previously. So last year, Morning Consult data showed that among video streaming subscribers, the one thing that they're generally least satisfied with is their access to live content, including sports.
Michael, getting back to what you ended on there, you called it a breaking point. So what does that signal then for the future here when we talk about what's at risk financially, the ad revenue, affiliate revenue that's at risk here, and then more broadly speaking, just the leverage or lack thereof that a lot of these studios, that a lot of these networks, I guess, are losing day after day at this point?
Right. It needs a classic innovation dilemma, right? Cable continues, as Kevin said, to be a huge cash cow, even in decline, while at the same time that streaming, really with the exception of Netflix, has been a gigantic money sink. So you're potentially in a kind of lose-lose situation. And it's been crucial for the studios to preserve the cable bundle, of which ESPN, as again he pointed out correctly, was kind of a linchpin. So the moment that collapses, and I think everyone knows it's going to collapse, and this feels like a breaking point, you're going to find significant losses for cable operators and for studios at the same time. So I would say it's a concern for all of us in the business.
Another story we're watching today is Warner Brothers Discovery, which warned of a $300 to $500 million profit hit for the full year amid the ongoing Hollywood writers' strike. The writers' strike is well past month 5. We have the actors entering month 2. How much worse could things get? And do you expect other media companies to also lower those forecasts? And Kevin, we can start with you.
Yeah, as you mentioned, we're in the thick of things with the double strike going on, and wouldn't be surprised to see similar revisions in earning expectations from other media giants. I think something to keep in mind with the double strikes going on is essentially with the WGA in specific, that's something that is disproportionately affecting TV writers. So the WGA is majority TV writers, with the minority being film writers, even though we see, of course, the strikes impacting both TV and film. But I think something that is important that's highlighted with WBD's revisions on earnings expectations is the shrewdness in its ability to diversify its revenue streams over the past year. So we've seen Warner Bros. Discovery be one of the leading companies in terms of being willing to license its content to other platforms. We saw it license content to the Roku channel. Recently, there was a deal with HBO and Netflix, with certain content migrating to Netflix from Warner Bros. Stable. And this would be something that would be previously unthinkable prior to, I would say, the last year, certainly when HBO Max first launched in 2020. So I think the impact of the strikes on Warner Bros. Earnings is a bit less than it would otherwise have been had it not chased these alternative revenue streams.